WBTN's Darin Newsom is our market analyst this week. The U.S. Department of Agriculture in August surprised corn and soybean traders with larger than expected production estimates. The agency's updated numbers, released Tuesday, pushed output even higher. With average yields of just under 170 bushels an acre in corn and almost 50 bushels an acre in soybeans, American growers are expected to bring in their third best corn crop in history and their best ever bean harvest. The USDA expects record corn yields in 11 states, none of which are in the top 10 for production, and also record yields in 11 soybean states, none of which are in the top 5. We talked with Darin Wednesday morning at Husker Harvest Days in Grand Island and asked for his thoughts on September's report.
You know, as I always say, as I say, USDA numbers are absolutely right. There's no questioning that, because the only one that can prove them wrong is USDA itself, and that's not going to be till January. They're the only ones that can change these numbers, so, on that grounds, the numbers themselves are right.
These last two reports have been incredibly surprising to the trade, and after the last report, I think there was more anger about the numbers. You have said before you think these reports don't hold any value, correct?
Correct.
What would you prefer instead?
Well, number one, we need to do away with any report that's just making projections, because projections just inherently are wrong, and we don't need to be telling the trading world what might happen, because it's just as easy to say it might not happen. So let's only release reports that are theoretically based on data such as quarterly stocks. Everything else needs to go away. So we can figure out what we have on hand every quarter, what that means for demand the previous quarter, and how much, if people want to make projections, what we might have left in another 3 months, 6 months time. So, we don't need these constant projections, because really the only thing these reports serve now, the only master they serve at this point, is creating trade on CME. We saw volume skyrocket. We see it every report day, volume skyrockets. Other than that, there's nothing accomplished. Patterns don't change, opinions on markets don't change, but the only thing that changes is the amount of trade that's seen.
What's the difference between the USDA projecting and private analysts projecting?
Because private projections, sooner or later, the markets are going to figure out who's the best, who's best and who's not. What service do they want to provide? And it's all about, should this be private information coming out, or should a public agency like USDA be the only market maker in, that really the world uses?
Yeah.
I think more private sources should be used. That's what makes a market. That's, you get more opinions that way, right, wrong, and way off base, whatever it might turn out to be. But you have more opinions that way, creating more of a market, more of a market environment, rather than all of it happening one day after the release of basically nothing more than a keynote number.
So you see these numbers that indicate a very good crop across basically the entire United States, with some small exceptions. When you travel across the states, and you've traveled to Illinois recently, what do you see?
Not bad. What I see corn standing in the field. Everything's turning brown. I'm not an agronomist. I don't know, but from what farmers tell me, we're looking at 15–20% less production than last year. What USDA is saying, 2 to 3% less. So somewhere it's all going to come out in the wash. We'll have a better idea of what we actually produced. There's new equipment out there right now. There's new technology out there right now to track what yield actually is as it's coming in off the combine. So we're going to get to a point where we have a better idea of what actual yield numbers are. We're just not there yet, and I honestly, I think that there's probably more problems than what's being acknowledged right now, but there's no way to tell.
So what do you use for your marketing strategy then?
What I use the market's opinion. I don't care about what USDA has to say. There's lots of private folks out there. I don't follow them either. But I look at the future spreads, and right now they're saying, yeah, okay, Dec to March spread is bearish. The Nov-Jan soybean spread's a little bit bearish. So we're going to have plenty of soybeans coming available, plenty of corn coming available, but it's further out. We're not seeing anywhere near the level of bearishness in the deferred future spreads that USDA is projecting right now, with its almost 2.4 billion bushel ending stocks for 17-18, which is crazy, or 475 million bushels of soybeans, which we know is going to come down by at least half by the time we get to the end of the 17-18 marketing year. So yeah, we're nowhere near as bearish in what I'm looking at as what's being reported.
What is your outlook for prices? Where do you think they could go, and how do you think farmers should use that for selling either old or new crop?
You know, I still like the soybean market. Long term, it's in an uptrend. You know, yesterday or Tuesday's trade, I mean, Tuesday's reaction didn't do anything to change that. So I still think soybeans are going to go up. They're going to go up to a new high beyond what we've seen over the last over the last few months. So soybeans still look good to me. Corn may try to follow along. It's held its contract low down in the low 340s, the D's contract. It may try to rally, get back up into the 360s, 370s, but you know, there's so much old crop still left, still to be sold. You know, that's going to hurt the cash market, it's going to hurt the basis market, and then we're going to start to get some actual harvest bushels in. So I think corn's going to struggle a little bit, maybe try to follow soybeans, you know, to a certain degree, but still struggle.
What's the answer here long term? I mean, it doesn't look like the U.S. farmer is going to scale down on corn and soybean planting. In fact, they might increase if they take away from wheat. How do you build anything if we still have these huge crops?
Well, we have huge crops, we have ending stocks, particularly in corn, that continue to go up. There's only two solutions. One, you have to reduce how much you produce, and that's not going to happen. We're not going to see reduction of acres to a significant degree. So we have to make sure demand continues to grow. We have to find new demand. We have to make sure we don't lose demand on the world stage. So that is key. If we're going to continue to produce 14 billion bushels plus of corn, we cannot lose any of our trade partners when it comes to corn. So that's very important as we think about all the renegotiations that are going on. You know, how important it is to hold on to the demand that we have and not start losing it to competitors.
One final question, what's your outlook for basis?
I think basis is going to struggle, particularly in the corn market. You know, we've got all the old crop, you know, possibly up to 2.3, 2.4 billion bushels of old crop still sitting around somewhere that could come in. We've got the new crop, however large it turns out to be, is going to start coming in. So I think short-term basis is going to struggle in corn. Soybean basis, you know, if futures rally, I think basis is going to soften a little bit, but I still think soybean basis is going to perform better than corn because demand remains so strong for U.S. soybeans.